a home has always been considered the American dream. Purchasing your home will likely be the biggest purchase you make in your lifetime. Getting the loan to buy or refinance a home is sometimes confusing, and we'd like to help you understand it better. I'm Sue Kress from the Liberty Bank Lending Department, and this video is designed to help walk you through the lending process. Using these tips will help you save thousands of dollars, reduce your monthly payment, select the qualified lender, prepare for the lending process, and refinance wisely. So you've made the decision to buy a home or found the dream home. Now it's time to get a home loan, also called a mortgage. There are many financing options to consider. Finding the best one for your situation is very important. A wrong decision could result in you getting a loan with bad terms or paying thousands more out of pocket over the term of that loan. Looking to refinance your existing mortgage to a better rate or shorter term? Look closely. These tips will help you make a smart refinancing decision that could save you thousands of dollars. Shop around. There are hundreds of companies doing mortgage lending and refinancing. It's up to you as a smart consumer to research and locate a respected, trustworthy lender. It's not always about the lowest rate. As you shop and compare the cost of your loan, don't focus only on the interest rate. In addition to interest rates, include other possible upfront costs such as points, fees, closing costs, and prepayment penalties. When comparing lenders, always look at the total cost of making the loan, not just the interest rate you'll pay. Your credit score will affect the interest rate you pay. Typically, a credit score of 720 or above will qualify you for the best rate a lender has to offer. If you have a lower credit score, you may pay higher rates and fees. Shop around. You may be able to find a loan with reasonable fees and rates. Is the offer too good to be true? Beware of offers of interest rates that are well below market rates. That very low interest rate likely comes with higher fees and could be the path to a bad loan. Understand all the fees to get a fair deal. Refinance wisely. Refinancing your current mortgage to a lower rate will likely reduce your monthly payment and the total interest you pay over the length of the loan. Remember to also consider all cost of doing the refinance, which may include closing costs and fees. Refinancing is also a good time to consider consolidating other large debts into your new mortgage loan, if the terms and rates are more favorable. You can visit the financial calculators on our website at RiverBender.com to estimate the cost of your loan. How about selecting a lender and loan officer? We are all bombarded with offers and ads promising the best financing around. Choose someone to represent your best interest and guide you to a loan offer that's right for you. Important questions to consider when making this choice includes: does the lender know the area? Understanding where your home is located is vital to providing the knowledge needed to get the best loan for you. Offer lending options and understand them. Things like fixed rates, 10, 15, and 20-year terms, adjustable rates, FHA. There are many loan options to consider. If you don't understand them all, then you need a professional that does. Stay up to date on current offers and grants available to your home buyers. Government tax credits, first-time homebuyer offers, local incentives, and other programs can contribute to big savings for you. Have references that you can contact? Reputable lenders and loan officers stand behind their work and may be able to share customer referrals. Confidentiality laws may limit sharing customer information, so a great source of referrals is your own family and friends. Getting pre-qualified can help if you're not sure of how much of a house you can afford. What does that mean? By providing the lender with your personal financial information, the lender can determine the monthly house payment you can afford based on established credit guidelines. The lender can then translate that monthly payment into the price range of homes you should be looking to purchase. Pre-qualifying helps you with the information you need to narrow your search. Another benefit to pre-qualifying is that you can shop with confidence, knowing that your financing will be lender approved. What will you need to apply? In most cases, you'll need to provide credit, income, assets, and liability information, including your residence and personal identification. Save time and expedite your application by collecting it before you begin the process. Some of the information you need includes tax returns with supporting documents for the last 2 years, pay stubs or proof of income for the past 30 days, bank statements for the past 30 days, and quarterly statements for any other investments you own. How is the lending decision made? There are many factors that go into the lender's decision, but the bottom line is your credit history and ability to repay the loan. This is determined by reviewing your credit report and calculating your debt ratio. That is the portion of income that goes towards paying all of your bills, including the proposed new housing expense. The guidelines for an acceptable debt ratio is 36% or lower. If you have additional questions, please contact me or the staff at Liberty Bank. Visit our website to find out more about mortgage offerings, current rates, and the use of financial calculators to help make a smart decision. You can even begin your application online. I'm Sue Kress, and it's been my pleasure to share these tips with you. Thanks for watching, and good luck in finding your dream home and a good loan. Remember, it's your money. Make the most of it.